What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we talk about a possible Texas stock exchange. Really interesting to think about, right? And I've never even really heard much about rivaling the New York Stock Exchange, the NASDAQ, and everything else, but it looks like there's some backing going on here, and this actually might take into effect in the next couple of years. So if you're excited for today's video, make sure that you smash the thumbs up button, subscribe to the channel, or consider subscribing if you've not already done so, and turn on the bell notifications for all future uploads. So yeah, let's get right into it. Again, this is from Bloomberg, from the Yahoo Finance page, obviously, but Bloomberg wrote the article. And I have a couple things that we're going to look at, do some little bit more research behind it, and kind of go from there. So BlackRock and Citadel back Texas Stock Exchange in challenge to the New York Stock Exchange. The most common one that's traded here in the U.S. is the New York Stock Exchange, the NASDAQ, and all those kind of things there. Those are the most common ones usually, and it looks like Texas is rivaling or wants to rival the New York Stock Exchange. So BlackRock, which again, if you don't know what BlackRock is one of the biggest corporations, has trillions of dollars of assets under management. So a lot of money in BlackRock. Citadel, same thing. Citadel was tied up with the Robinhood fiasco with the GameStop and the AMC squeeze that happened a couple years ago and stuff like that. And other investors are backing an upstart Texas stock market, laying down a challenge to the New York Stock Exchange and NASDAQ Incorporated, and signaling a potential boost for a state trying to grab more of the financial services industry. And this article is going to talk about why Texas, why would we go there, and everything else, and what their incentives is here. And you don't really think much about it when you think about stock market exchanges. You just be like, yep, I go on there, I trade stocks, I buy shares, whatever, call it a day. But there is more behind it that I guess is really, really important to know. So, the Texas Stock Exchange has raised $120 million and plans to file registration documents with the U.S. Securities and Exchange Commission, the SEC, according to a LinkedIn post by James Lee, the exchange's chief executive officer. So, the CEO of this new exchange, James Lee, is looking at filing paperwork to hopefully get this ball going with the SEC. Because obviously, when you look at stocks and stock market exchanges, the SEC plays a big part because they have their regulations, the restrictions, and everything else. So the Texas board will try to entice companies seeking relief from rising compliance costs at the New York Stock Exchange and the NASDAQ, Lee told the Wall Street Journal, which earlier reported the development. While entirely electronic, which is a little bit different. I mean, I know that like most trades these days are electronic, but there's still a main stock exchange floor where people ring the bell. There are still, people that do work on the floor of Wall Street. You can watch videos still of recent, and you'll see that they are still there. Lee said that the TXSE, Texas Stock Exchange, will be headquartered in Dallas, bolstering a metro area that has been gaining financial jobs from the likes of Goldman Sachs and Charles Schwab. So, financial jobs, financial banks, financial industries, Goldman Sachs, Charles Schwab, some of the most major financial institutions, are gaining traction down in Texas. So they're thinking about possibly having a Texas Stock Exchange down there. The Texas Stock Exchange will focus on enabling U.S. and global companies to access U.S. equity capital markets and will provide a venue to trade and list public companies and the growing universe of exchange-traded products. So, they want to basically build more and more and more. The exchange aims to handle its first trades in 2025, so about a year out, and host its first listing in 2026. A spokesperson for Ken Griffin's Citadel confirmed the company is an investor in the project. BlackRock said the project would increase liquidity and improve market efficiency for clients and other investors. Liquidity, long story short, is basically about how much you're able to trade and exchange shares of companies and everything else. When you don't have that much access to things, the shares are limited. You don't have as much liquidity, so you can't have buy and sell orders as much. It takes a little bit of time. So liquidity is basically like how much stock you basically will have or how many shares you basically have in these kind of companies. The Texas venture is trying to muscle in on a business that consists of about 16 equities exchanges. I didn't know it was that many, but it is. With widely varying trading volumes. The New York Stock Exchange accounts for more than 20% of the volume in U.S. equities trading in May, with the NASDAQ representing 15%. So almost half of your trading volume and half of your liquidity aspects of trading stocks and everything else is from the New York Stock Exchange and the NASDAQ. That was a bunch of other ones that they talk about in here that are smaller ones, but this is what I thought was very, very interesting to think about. The listing of companies looking to tap the public market is also highly competitive. to entice corporations to choose their venues for initial public offerings, also known as IPOs. So if you ever hear about things on like Robinhood or be like, oh, get this IPO. IPO is the initial public offering, which is when they first start to get listed on the NASDAQ, on the New York Stock Exchange, on whatever exchange you basically want to get listed on. Exchanges typically offer sweeteners like marketing on billboards in Times Square and ringing the opening bell on the floor. Now, again, hence they bring up the idea of Times Square because that's New York City, right? So if you want to be able to get, if you're looking to get listed there, Times Square is, and you want to advertise your company, for example, the New York Stock Exchange will be like, hey guys, listed with us, we'll advertise your company on billboards. We can bring that publicity. We can make your company become more public because Times Square is a very busy area in New York City, right? So I've never really thought of it in this aspect, but it's very interesting to think about how they have these sweeteners where you can market your company on the billboards in Times Square and also ring the opening bell on the floor. If you ever watch the stock exchange or the market open up, you always will see someone ringing the bell, and there's also a closing bell. So, and the companies will ring the bell, they'll have their logo on it, so people that are watching it will be able to see with the company and everything else. Once a company is listed, it generates steady income for the exchange as long as it doesn't leave for a rival venue. This one talks about how there's different, exchanges. So there's MEMX. There's another one they linked about. Oh, FMX, which is another one here. So it's very interesting that there's a lot of exchanges for things, but a majority of the trading volume is through the New York Stock Exchange and the NASDAQ. That's where a lot of the volume comes into play, really. Anyways, so backers of that platform, which also added an options exchange, include a suite of legacy financial institutions such as Goldman and JP Morgan, as well as market makers Citadel and Virtue Financial Company. This is another exchange here that they're talking about, which has gone public recently, which, again, isn't really as important right now, but they talk about those different types of exchanges. And there's not just two, there's a lot more than that. Texas has been increasingly luring corporations and financial firms by offering lower taxes and a more relaxed regulatory environment than blue states such as New York and California. So, again, big corporations, you have these billion-dollar companies looking at possibly saying, hey, you want to come put your headquarters in Texas? Less taxes, better benefits for you, more relaxed regulatory environment, basically translates to regulations aren't as strict. You're not being held up to a bunch of standards as much. Kind of a little more of a mellowed out area, maybe. Texas as a Republican state, big corporations, money, tax advantages, all that kind of stuff plays a part here. Goldman is building a new regional campus in Dallas with room for more than 5,000 employees, while JP Morgan's Texas workforce has surpassed 30,000 in recent years, as its New York total has slipped to less than 29,000. So JP Morgan, again, one of those bigger financial companies, big financial institutions, their Texas workforce is higher than the New York one. So, okay, if that's where people are moving to, right? Why not? The state is also developing a business court system with an eye to handling more of the complex corporate litigation that Delaware is known for. And that is because, as you will see, Elon Musk Tesla Incorporated is asking shareholders at this month's annual meeting to support a proposal to move the company's articles of incorporation to Texas from Delaware. And that's a whole different situation that talks about the idea of Elon Musk essentially having to fight for his pay package that he got from the shareholders and everything else. Delaware flagged it and said that they weren't in the right mind, and there's a whole different thing about it. And so Elon was like, you want to flag me on this in Delaware? All right, I'm going to move to Texas. So their hope is to move to Texas with a shareholder vote, of course, because the shareholders are the ones who obviously comprise the company and in decision-making and everything else. So he wants to go to Texas, too. So it's a very, very interesting thing about. There's a different article that comes into as to what it does, right? So this is from Dallas Innovates. This is the guy, James Lee, right here, who talks about it. And I want to bring up this point here, which says, planning a more CEO-friendly exchange. What a section to title, with less regulation and diversity rules. The Wall Street Journal broke the news of the planned launch on Tuesday, knowing that the Texas Stock Exchange Group is aiming to take on what they see as onerous regulation at the New York Stock Exchange and the NASDAQ, with the goal to begin handling trading. The Wall Street Journal said that the Texas Stock Exchange plans to leverage dismay at rising compliance costs at the New York Stock Exchange and the NASDAQ, as well as frustration with rules like the NASDAQ's board diversity requirements. And of course, if you are not new to these videos, you know I dove into those a little bit more here. So take a look. So this is essentially from the NASDAQ itself, the board diversity rule and what it means. So they have a whole sheet here that they talk about. And essentially I had to figure out what they were even meaning, because it's, again, terminology in the financial industry is a little bit weird sometimes for me, just like everybody else. So I read into it a little bit more, and let me zoom in here a little bit for you guys here. So operating companies with boards of more than 5 members can satisfy the diversity objective with one female director or one director who is an underrepresented minority or LGBTQ+. As described below, the board diversity rule does provide additional flexibility for smaller reporting companies. And essentially what they have to do, they have to report what their board, they have to basically report their diverse board, the guys who are the top dogs of the company. So like Tesla's got a board, Amazon, Facebook, they all have boards, and they all have these different people that have financial backgrounds. They comprise of these like big decisions that these companies might be possibly making, right? And so they say that they need, basically the NASDAQ says, hey, you guys need to have a diverse board. You have to have certain compliance and everything else. So this article here also talks more about it and kind of summarizes it for you. So the NASDAQ diversity rules require listed companies to disclose annually their board level diversity data in a matrix format provided by the rules. Companies are required to disclose the board diversity data in the annual meeting, proxy statement, or information statement. Here's the form for it. Again, they can also put it on their website, but just link it to have NASDAQ have the link to it, so they're able to have access to it, which is very, very interesting. So they have to basically, this is what their matrix comprises of. So again, the genders, the backgrounds, everything else. So it's all here. So they have these certain restrictions that you have these kind of people in the board minimum to make sure no one's underrepresented. That make sure no one is unrepresented, I should say. And so my taking of this is in that they have this board diversity restrictions, requirements, and this exchange might relax that a little bit more, might relax different things, you know, give a little bit more of a CEO friendly thing, as they say, to kind of relax a little bit more. And also the rising compliance costs here. Now, there's not like a specific there's not a specific like way to calculate that. It's all based on the company and everything else here. But just kind of talk about a couple of things about compliance. This is the fee to get listed on it, which is crazy. The company has to pay the NASDAQ almost $300,000. Did not know it was that crazy for the first time to get listed. And it goes into all the different rules and everything else. All-inclusive annual listing fees. So in order to stay on the exchange, you got to pay annual fees. A company shall pay an all-inclusive annual listing fee. The all-inclusive annual listing fee eliminates standard annual fees, additional share fees, record-keeping fees, and compliance plan review fees. Again, talk about the compliance and everything else, the diversity boards and all that stuff like that. Let's take a look here. So all domestic foreign companies listing equity securities except as described below. So if you have up to 10 million shares, it's going to cost you this much. 50,000 until December of, this is from last year, of course. So obviously you can tell the prices are going up. Over 150 million shares is looking at almost 200,000 every single year. So as you can see, these fees are in fact going up still. And again, the more you got to pay for fees, the more expensive it becomes. And then, you know, people are like, oh, stop raising these fees, stop raising these prices. So the goal here of the Texas Stock Exchange is to basically relax those compliance costs and to kind of dial it back a little bit more. So very, very interesting. So they want to bring more liquidity to the market to be trading with stocks and companies and everything else. They want to kind of have it more of a relaxed regulations, which for me, I don't really know how I feel about that just yet. Because again, big corporations, and then you're relaxing the regulations on things. I don't know quite how I feel about it. If you're watching this, you made this far in the video, first of all, thank you so much. But also leave your comments, leave your questions down below, leave your opinions and your insights down below, of course, as to do you think a Texas stock exchange will be a good idea for the U.S. markets? I don't really know quite yet how much publicity it'll get, how much funding it's going to have overall, and how many people are going to be trading on the platform. But it will be interesting to see if companies either A, switch from the stock exchange, from the New York one or the NASDAQ, or they're just going to start, instead of going there in the first place, they go to Texas instead because of tax advantages and everything else. So be very, very interesting. So thank you so much for watching today's video. I hope you learned something new. But yeah, a potential stock exchange in Texas is hopefully coming in the next 2 years, it looks like, give or take. So if you have any comments down below, make sure that you leave them down there. Make sure you like the video, subscribe to the channel, and turn the bell notifications for all future uploads. Hope you guys are making money in the market. Maybe it'll be the Texas one in the next couple of years. And I will see you guys in the next video.